Here we go. I'm going to be doing question 4 of this question paper over here. And this is question 4. We have information relating to green light traders is a local distributor of anti-theft logs for residential solar panels. Due to the increase in solar panel theft, green light traders started importing and selling a variety of specialized anti-theft logs. Greenlight Traders is registered as a value-added tax vendor. VAT is levied at a standard rate of 15%. Highlighted. The entity applies the periodic inventory system and makes use of control accounts for debtors and creditors. The current financial year end of Greenlight Traders is the 28th of February 2023. Highlighted, meaning that the beginning of the year will be the 1st of March 2022. The bookkeeper asks you to assist with the closing processes at year end. You need to prepare the trading account in the general ledger of Greenlight Traders for the year ended 28th of February 2023. Ensure the account is correctly closed off. Now, this will be our trading account, and you need to remember what goes into this trading account. What goes into the trading account will depend on the type of stock system that you're using. And here we are using periodic inventory system. With periodic inventory system, you would know by now that when you prepare your trading account, on the credit side, you will have your closing balance. On the debit side, you'll have your opening balances. Then you'll have your purchases. And remember, from purchases, you need to minus the returns, donations, or drawings. And you will have carriage on purchases. You will have custom duties or import tax. All of those will be included on the debit side. And then you will minus your closing stock in order for you to determine what we call cost of sales. And on the credit side, you will have sales. Remember these over here, your opening plus your purchases minus returns minus drawings minus donations plus carriage on purchases plus custom duties minus closing stock. Those will give you your cost of sales. So your cost of sales in essence will be this side. Obviously, your opening plus purchases minus returns minus donations minus drawings plus carriage on purchases plus custom duty will be bigger than your closing stock. Now, when you take your sales and you minus all these, which is your cost of sales, you will get what we refer to as the gross profit. And that gross profit will go to profit or loss. So if you take the sales value over here and you minus all of these, remember all of this will be your cost of sales. You minus your cost of sales. So if you take your sales and you minus your cost of sales, you will be left with what we refer to as your gross profit. So this is how your trading account will basically look like. Now we need to check the information that we've got that will enable us to prepare this trading account. They gave us capital on the 1st of March 2022, which is the beginning of the year. They gave us courage on purchases. So I'm going to put it that on the debit side, I'll highlight those with this color here that goes to, that will be part of your cost of sales, and your carriage on purchases will be one of those. So to determine your cost of sales, you will take your carriage on purchases and you will add your import duties. You will add your opening stock. Your opening stock is basically made of all of these up, the sum of those. It should give you that 45,000. You will add your purchases and then you minus your purchase returns. And another thing that will form part of your cost of sales, they said to you a physical inventory stock count performed on the 28th of February 2023. I will highlight that, indicated that the following inventory was on hand. So this will be your closing stock. You will add them up: 15,000, add it with 7,000, add it with 3,000. That will give you your closing stock. You will minus it from the ones that we have highlighted. That's fine. And then they say to you, Greenlight Traders maintains a constant markup of 20% on cost. I don't know if I'll be able to use that. And then they say on investigation, an investigation revealed the following omissions. So all of these were omitted, transactions or items left out. So they were not taken into account when determining the values that I've already highlighted above. And these are omissions and errors, all right? It says here on the 26th of February 2023, which is close to the year end, the owner of Greenlight Traders took large logs for installation at his private residence. The cost of the logs amounted to 5,750 inclusive of VAT. The bookkeeper did not record this transaction in the accounting records of Greenlight Traders for the year ended 28th of February. Please note that these logs that were taken by the owner for private use, we regard them as drawings. This will reduce your purchases. Drawings will be recorded under purchases on the credit side. So in your purchases account on the credit side, you will record drawings there at cost price, excluding VAT. You need to exclude VAT here because you were told that Greenlight Traders is actually a VAT vendor. So every amount that you record must be exclusive of VAT. Let us record this. The opening balance for your trading account, which is the opening balance of your stock, it was given to you as 45,000. I did highlight it for you. It is that 45,000 over there. And then you will add your coverage on purchases as well as your import taxes. And that was relating to inventory purchased, obviously. And then you will add your purchases. And I'm just going to go to the purchases quickly. When it comes to the purchases, I will take it as it is, all right, which is 245,000. So whatever you put in there must be net purchases, which will be determined by taking that 245,000 and you minus these purchase returns over here, and then you have to minus drawings. These drawings here must be subtracted. That amount will be subtracted, but we need to find a VAT exclusive amount. And to get the VAT exclusive amount of that 5,750, you will take that 5,750 multiplied by 100 and divided by 115. So this will actually enable you to find the cost price of the goods or logs that were taken by the owner for personal use. We exclude VAT because you were told that Greenlight is a VAT vendor. We subtracted these here, which is this 12,000 relates to purchase returns. So your net purchases will amount to 228,000. Then you will add your coverage on purchases relating to inventory, which was given to you as 20,000. You will also add your custom duty or import taxes, and that amounted to 49,000 rand. On the credit side, you will have your sales, okay? But whatever sales you put there must be net sales. And when you look at the information that you got here, you were given sales as 506,000, and you were also given sales returns of 15,200. What we know is that these sales returns must be subtracted from that value of sales in order for us to determine the net sales. But when you read 4.2, they say that 70% of total sales, we don't know what total sales are here, were made in cash. So whatever total sales were, if you multiply them by 70%, it'll give you cash sales, right? That's what this information is saying to you. The bookkeeper did not account for VAT on the credit sales. Now, if 70% is cash sales, it simply tells you that your credit sales amounted to 30%. Now, the total invoiced amount was credited to the sales account for the credit sales. Now, the problem is that with this 30%, it was recorded at 115%. 115%, when you multiply it by 30% of your total sales, it will give you credit sales. And this was actually wrong. This was supposed to have been recorded at 100%. So what we need to do is to go to our total sales value of that 506,000 and minus VAT from it, because those sales were supposed to have been recorded at a value excluding VAT, and that is because we are a VAT vendor. Greenlight is a VAT vendor, so we needed to record sales at an amount that is VAT exclusive, which is a little bit tricky. Now, some of you will be tempted to take that 506,000 and multiply it by 30% and then multiply it by 15% and take that and subtract it from your sales. That is wrong, guys. That is because in that 506, not the whole amount is VAT exclusive. There is a certain amount that was VAT inclusive. I had to come up with my own example here, just to show you guys how it works. And this is what my example enabled me to do. So what we've got here is our total sales, all right? But in this total sales, we know that whatever our sales amount was, 70% of that sales amount was for cash, right? Whatever sales amount was, when we multiplied it by 70%, it will have given us cash sales. And if we had whatever sales amount it was, if we multiplied it by 30% and multiplied it by 115%, it gave us credit sales. And the problem, honestly, guys, is just here there. We don't want that amount to be at 115. We want it to be at 100%, just like this one over here. So we've got two sales values that are reflected at different values. The other one is VAT exclusive and is correctly calculated as VAT exclusive amount. The other one is VAT inclusive, and that one is incorrect. So I couldn't just take that 506,000 and multiply it by 13 and multiply by 15 to find VAT and subtract that VAT from the 506. I couldn't do that. That's why I had to come up with an equation that if I had these sales, this is what I could have got. So when I took my sales and I multiplied them by 70%, and I took my credit sales and I multiplied them by 30% and I increased them by 115%, I was going to get the total sales value of 506. So what I did here is that I simplified this. Okay, so I took these green amounts here and I multiplied them and added them, and they gave me 1,045x. So you add the coefficients of x, which are the values, and you keep x as it is. Then you divide both sides by x. When you divide both sides by x, you will get that as your sales. These are simply sales. Okay. And these sales here are original sales that were VAT exclusive, which is what we could have recorded this as. So what we need to do is to take these sales here and multiply them by 30% and multiply them by 15% to get the VAT amount, which will be 21,789. So this VAT amount was incorrectly included in the sales value. We need to take it out. So you will take that 506,000 minus this VAT amount, and then you minus your sales returns to get your net sales, which is VAT exclusive, and that will be 469,002. Then from this, you just have to minus what we call the closing balance at the end of the year. Now to get that 25,000, all I did was to add these amounts here. Okay, 15,000, this will give us 10,000. So 15,000 plus 10,000 will give us 25,000 rand. Now you'll realize that the credit side is actually bigger, so you will total the credit side. It'll give you 494,002. Put the total on both sides and then find the difference this side. Take 492,002 and minus that, minus that, minus that, minus that. The balancing figure will be your gross profit, and put it in your profit or loss account on the credit side. That's what you were supposed to have done here for this question. I hope this helped. Thank you for watching. Please don't forget to invite your friends to check out this channel, subscribe, share, and check the description if you would like us to have an online lesson or a contact lesson. Khotso.